Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that responsive sellers were active at that 90 half to 92 half resistance zone, and the overnight session has been very balanced. Heading into the open, we're going to be using the 85.75 to 87.75 area as the micro bull bear zone. As long as buyers can hold the market above 85.75 to 87.75, there's still a chance that we can balance and then try to break higher. This 90 half to 92 half zone is pretty important. It's some of the recent range highs, some recent important swing highs are within the zone, and this area is really key if we're going to get any upside continuation. So in the event of a break above 90 half to 92 half, it would tell us that the buyers are now in firm control, and we could be heading back up towards the all-time high of 2003. So this is a very key zone this morning. On the downside, we've built a lot of volume in this 85.75 to 87.75 zone. So if the market can firm and kind of just hold above this micro bull bear zone, then we can balance and then try to put in that upside break. Now, if we break and hold below the micro bull bear zone, then it tells us that the market is not strong enough to stage an upside breakout, and it could just continue balancing within the recent range. So a break below the micro bull bear would bring the 80 to 82 support zone into play. Now this is a spot where buyers could still be active, but we will have to gauge the situation in real time to decide whether we fade the market at 80 to 82, or whether it makes more sense to position ourselves short and then target 80 to 82 and potentially even lower, right? So that's something that we will have to gauge once the market opens. And then below 80 to 82, we have yesterday's low, 77.25, and below that, the really solid support in this range is down at 71.75 to 73.75. That's an area where now the market would have moved from a short-term swing high all the way down to a short-term swing low, and considering that we're heading into the weekend, there's really no major catalyst to drive the market big one way or the other, then that's an area that can shut off the selling, and buyers can still be active at 71.75 to 73.75, or even ahead of that. So basically off the open, we're going to be gauging, is there enough strength in the market to put in an upside break, right? And if there isn't, then balance is more likely, right? So 85.75 to 87.75, we can use that just to establish our short-term directional bias, because we have been seeing some better upside momentum over the last couple of sessions, and we don't want to go bearish on the market until we've seen some decent support area break. And that's why from a price action perspective, 85.75 to 87.75 can really help us figure out which side is being more dominant, which side is more in control. And as long as the market holds that zone, the buyers can still hold it together, and they can still step in and make a push up towards 1995 and 96.25 to 98.25. So the main upside target in the event of a break to the upside is 96.25 to 98.25, but the market could even go up and tag the naked VPOC at 2000.75, and then the major resistance above is at the all-time high, 2001 to 2003. That's an area that, even in the event of an upside breakout, that's an area that can cap the upside, that can shut off the buying, because it's very unlikely that we're going to break out of this entire range and put in a new all-time high heading into the weekend. So off the open, let's use 85.75 to 87.75. Just decide which side's in control. Let's see which way momentum's leaning, and based on that, try to position ourselves, because from here we're either going to break to the upside, or we're just going to balance and put in a deeper pullback down to 80.82 and potentially even yesterday's lows and some of these swing lows. So those are our main thoughts heading into the open. Let's see how well the market holds up this morning, and we'll take it from there.